I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today we have a very special guest, Ellie Perlman. I'm really excited about this interview. Ellie her accomplishments are probably really too long to list. She's an amazing real estate syndicator. She's, former recovering lawyer, and she is a Forbes author and recently has launched a fund. So lots of things to talk about, I think, in terms of real estate, but I guess where I'd like to start, Ellie, is if you could maybe tell people kind of your story. I know a lot of it, but I think you have a very interesting sort of background and beginnings, and in a lot of ways I can relate, and I imagine there are a lot of other people out there as well that would relate.
Yeah, absolutely. I can take us back to probably mid 80s back in Israel where I was born. I was born to a family that was not wealthy, not middle class, not even lower middle class, but rather poor. And at some point, I remember that the welfare system intervened, and there was a whole question of whether the kids are going to stay home. I was the oldest of four kids. It was me, two little sisters, and one little brother. And my mom was sick at that point, couldn't really take care of us, and my dad didn't have a steady job, and so at some point my parents were fighting the system not to take us away from them, and put us elsewhere. And I don't know what would have happened if that was a reality, but that was my reality. And I remember, when I was 11 years old, I used to clean synagogues to help my parents. I think we would get something equivalent to like 40, 35, $40, something like that, for cleaning. And it's at some point I understood, when I grew a little bit older, I understood where we are in the food chain. And I said, you know what? I got to do whatever I can to not be in that place when I'm old enough to take care of myself. And I just had a conversation today actually with someone who had very similar background and is a very, very successful real estate investor. And he said, when you're poor and you become wealthy, you never leave that place. You're always going to stay poor. And in that sense, I can totally relate to what he was saying. He just told me about a friend of his that made 10 million and then retired. And he said, I can never retire. And I've made, more than that. And I totally agree. I can retire today if I want to, but I can't, because part of me is always that 11-year-old kid that needs to clean the floors to make money. And so I know that I'm blessed to have to not worry about money, but it's an irrational thinking. You still got to work hard because you don't know what's going to happen, and you got to brace yourself. I mean, there are huge companies there, that failed, and you can never know. You can never know. So that's kind of the mindset of just working every day like it's the first day of your startup. That mentality I took from MIT. But going back to my background, I worked really hard to get into law school because I thought I always wanted to be in real estate. But I thought, I need to have money to invest, which is wrong. But I didn't know it at the time. And I thought, okay, I'm going to become a lawyer and I'm going to represent people that own real estate. And that's exactly what I did. And after I practiced law, I realized pretty quickly that I think I'm on the wrong side of the table because I'm sitting around the circular table and my, me and my colleagues are on one side and our clients were on the other side and they were building multifamily assets. It was Eastern Europe because we were in Israel. They were buying in Eastern Europe and they were flying all over and looking for lands and building projects and buying projects. And I was so amazed and so excited. It was always, for me, I was excited to hear their stories. And I told myself, I think you're in the wrong side of the table. Um, and I told myself, you should do whatever you can to get on, to get a piece of the action and get
Yeah.
closer to real estate. So I quit my job as a lawyer and I became a property manager. And it's really not a glamorous position. And people, I remember one person told me, you were a lawyer and you became a property manager.
Yeah.
That's not very smart. But, I didn't care about titles or prestige. I just knew I wanted to learn it. I learned a lot. 4 years, I learned a lot about um, tenants and how to handle relationships with tenants and how to read financial reports and how to operate properties. And then March of 2014, I decided I'm going to quit my job and move to the States because I want to start a real estate company and I want to be in a place that is going to give me all the tools to succeed. And I've always seen the US as that country. Um, so I came here to MIT and I got an MBA degree, learning really how to start companies, how to work on a tight budget, um, how to raise money from investors. And so learned all that. And then with that scrappy entrepreneurial mentality, started Blue Lake shortly after graduation. And I see it as, I saw it from the day one as a startup. So I was hiring people from day one. I was working on building processes. So we have, today we have 30 to 50 deals we look at every day. And we have this pipeline that I created early on. So the goal was to create a company, not to buy an asset and grow organically. Um, that's the short version, I guess, of my
Yeah.
story.
Yeah. The, the short version with a whole lot to, sort of bring out of it. And I think, I feel like I've heard this from a lot of people, you, myself included, people who didn't come from money, right? I totally agree. That never leaves, right? It
Yeah.
doesn't matter. It doesn't matter how successful you come and become. And I almost think it it drives you to be more successful because whatever it is, you're trying to escape, you're trying to prove something. I don't know, and I'm sure it's different for everybody, but it doesn't leave your mind. It doesn't leave your heart. Whatever part of you, it's there. And so you're like, it's, I don't ever want to be poor again. Like but also like, I don't, but you can then use that to extend it to your family, your people, you can use that drive to help others and things like that. So I think, yeah, that it doesn't leave you. In a way, like, I don't know if you agree, I don't want it to leave me. Like,
Hmm.
I don't want to, I realize it's a part of me and it's a part of me that has gotten me to where I am, and it will get me to, sort of the next level. I believe it's, at times I think maybe when you're young, there's some shame associated with it or whatever, when you see, I mean, I've heard you sort of tell a story about this, but when you see maybe you don't have what the other kids at school have, right?
Yeah.
There's just, there's that thing. And at first you don't realize what that means. And then eventually you may realize what that means. And you just kind of, I think it stays with you. So I think that's a very true statement. And, like I said, with the other person you were talking to, there's no interest in retiring, right? You're searching for whatever that next win is, whatever that next, kind of level is. So I think that's a really actually important driver of success. It's in you. I mean, it sounds like from you were cleaning synagogues at 11. So it, you had that, that's in a way, you know, sort of that work ethic and entrepreneurial spirit always. And then you took that into becoming a lawyer. And then you it seems like you always had the goal and you did whatever it took to get there.
Yeah, pretty much. I think at some point I realized late in life actually, that I'm basically a challenge junkie. I love a challenge. I love when people say you cannot do it. I've been
Yeah.
told that so many times.
Yeah.
And I love the challenge. I love to work hard because there's nothing more satisfying than going through something challenging and looking back and say, wow, I did it. I
Yeah.
did it. And it's so energizing. It's so inspiring also to people that you care about and want to be a role model to. And I always like a challenge. It's if it's too easy, I worked in tech before, and very easy job, 6 figures, getting to work at 10 a.m., leaving at 3 or 4 p.m., doing all your work and more than you've been asked to do. And
Yeah.
it was just not it was so boring. I was so bored. I was making very nice salary, but I was really bored. I needed a good challenge. And in a way, real estate is constant challenge. You're never going to be bored in real estate. Something always happens. It never goes according to plan. And I love that part. I love that part in real estate. I love that part in real estate because it keeps you on your toes. You feel that it energizes me. I
Yeah.
feel that I learn something new almost on a daily basis. I get new ideas. I meet new people, even during COVID, through Zoom. And I expand my horizons, and I feel how my whole being is kind of expanded and becoming deeper and more informed and just better. I think a challenging career is making you better in many, many fronts.
Yeah, absolutely. I mean, just the mental stimulation, right? If you're just sitting at a desk all day and it's easy to do your work, that's it's going to, I think, decrease your motivation to sort of accomplish anything really at that point. It's like you need that uh those challenges, like you say, to kind of keep going and keep pushing. But you every step that you took does seem, and I don't know if this was intentional along the way, but it seems like it all built towards, sort of where you're at now, in the sense that you were practicing real estate law, then you're a property manager. And so, and even the tech side of it, like there's a lot of tech now that's going into, um, the new smart homes, smart apartments, things like that. There's a lot of tech out there. And then also just getting your MBA. So all of that, and again, I'm not sure if you did it intentionally, but all of that is going to contribute to your success now
Very
at this point.
very intentional. And some of it was painful. When I was a property manager, I did not like it. I wanted to quit, and I didn't, because I knew that I needed this experience. And I knew that going into MIT, if I'm going to have gaps in my resume, or if I'm going to work in something that is not related to real estate, I'm going to have to explain the deviation, that I'm not
Yeah.
on track. So every step was actually very calculated. I was creating a path. I didn't want things to just happen. So in law school, I was focused on real estate law. Then that's why I became a real estate lawyer, and then I switched to a property manager. And then when I went to MIT, then the focus shifted a little bit to building a company. It didn't have to be necessarily. I also took real estate classes there and learned how to underwrite real estate. But the core was to look at it as business, as a business. And that's one of, I think, the most powerful things in any industry, is to come with knowledge and mindset of a completely different industry and implement it.
Yeah.
So there's a lot of things that I see in business. I see it as as an entrepreneur and as a business owner, I'm looking at the marketing aspects and I'm looking at the processes. And that's a big thing that that people learn at MIT, how to build processes, how to run on a tight budget, how to be scrappy and all those things. When I started Blue Lake, I started a company. I didn't just started an investment firm. Everything was very much designed from the first day to scale marketing, to scale the underwriting, everything that I did, I created a process. And at first I did everything, and it was extremely frustrating and also not very smart. But I felt that I needed to know every area, so I'll know who to hire. And then I basically wrote down, it was kind of a chart. Okay, what's just, okay, this is your process. Where do you want to be? Where do you have to be? And where do you not want to be at all? And then I fill in the gaps and hired people to fill in the gaps where I did not want to be in or didn't have to. And so the focus was, what areas of my business do I actually have to be in? So for instance, speaking with a billion-dollar fund who wants to invest with us, that's something I would still need and want to do. But running, the numbers, doing initial analysis, I have to be honest with you. I'm as much, it may not seem, but I'm not a numbers person. I don't like numbers, even though I'm very obsessed with numbers. Um, I prefer not to sit down and underwrite all day, and some people love it.
Yeah.
So you find someone who loves it, and you hire them or you partner with them, and they do it. So you can focus on what you enjoy. I enjoy talking with people. I enjoy, speaking with partners and that side, and speaking with investors, I like to stay active in. All the other things, you can hire or partner.
Yeah. Yeah. Well, and I think that, uh, certainly, talking to those large investors or those big funds, they're going to want you to be the person that they talk to, right?
Yeah.
Like they're
Yeah.
not going to want to talk to your assistant and things, like, just because they're going to invest large amounts of money. So they want to know that they can, know, like, and trust you. At this point, you have a track record. I don't think that's probably a hard thing for you to establish, but it's certainly, it makes sense for you to be there and not sitting in front of a computer and underwriting the 50 deals that are just coming through the email every day. So it makes total sense. I'm interested to know, was that a mindset shift that you had to make from like doing all the work to running the company? I guess the example is like, as a property manager, you're in the day-to-day, you're kind of there. In all of the steps that you took along the way, even I would assume as a lawyer, you're very involved in a lot of it. And then you sort of got to the point of starting Blue Lake, and you said, okay, now I'm running a company, and you have to step back and be the visionary and the CEO, and like you said, hire the right pieces and put them in place. Was it hard for you to make that transition? And also, I guess, because we touched on sort of, that work ethic that you developed at a very young age, and you're always looking to do things and the challenges, did you feel like it was hard to stop wanting to do everything and actually, like, spread that out, delegate it, whatever the right terminology would be?
Yeah, extremely hard, because type A personalities, they always want things to be done in a very specific way, and it's hard to delegate. And I think my number one job is to find the right talent. It's the number one job is to find the best underwriter, to find the best investor relations person, to find the best marketing team. And it's hard to let go, and it's hard to say, I trust you, now go run with it. And when the product is not exactly what you want, you train them, you adjust it. And it took me a while to be comfortable doing it. It was not easy for me to do. That was one of the hardest things I've had to do. But at some point I realized, if I want to grow, I cannot control everything. it started from, if I want to grow, I cannot do everything. But I hired people and I was micromanaging them. And then I said, if I really want to grow, I cannot control everything, because all I'm going to do is audit everything they do, and I let go. And once I've done that, my company just skyrocketed. It's just amazing. If you have the right people in place, the good employees, the stars, they're not going to want to be under miss um micromanaged.
Micromanage, yeah.
That's the word I'm looking for. They're not going to want to be micromanaged, and it's mismanaged also, in my opinion. They want to have their own kingdom to run with and to lead, and you got to trust them. And if you don't trust them, then you either got to work on yourself, or you just got the wrong person, because not everyone has the right the ability to run their own kind of little kingdom. And
Yeah.
so it's, yeah, it's basically finding those people. And I know a lot of, maybe some of the listeners are aspiring syndicators or just beginning, and they don't have maybe the money to do it. And I'm asking, if you have, and I'm not saying you should touch your savings, but if you don't believe in yourself, if you're not going to invest with yourself, why do you expect an investor to do the same? So you can start with maybe someone who works on an hourly basis, and you can pay them on, you can hire them for a part-time job remotely. There's a lot of cheap um, talent overseas. I haven't, all my employees are US based, but you can still do that if you want to save money. And then the money you're making from the first deal, reinvested in the company and reinvested, and it's just going to grow and explode. Um, if you have the opportunity to do it and even allocate a few $1,000s a month to hire someone, highly, highly recommend that you do that.
Yeah. Yeah. Uh, for people that don't know, she's talking to me. Ellie's Ellie's my mentor. And we've had this conversation before. And it is, I mean, it's something that I for sure struggle with, in that on both sides of it, it's like letting it go to, getting someone else to do it the way you want it done. But then also like, well, that, we're spending money that we might not be making yet. But you're right. You're 100% right. It's an investment in your business. And it's like, I have no problem investing in the business in terms of like equipment or whatever you might need to, the stuff that almost like on paper makes more sense, but
Yeah.
in reality, it's like having the right people on your team. That's actually what makes sense, right? Like that's actually how you will grow the business and how you've grown the business. And so, yeah, I mean, it's, yeah, as you're saying, I'm like, yes, I know, but I'm sure there
I'm
are
not
other.
saying it's the only way. I'm just saying that you can grow. I think that the growth is going to be a bit slower, and it's going to be more frustrating. It's not going to be fun for you. I didn't make money, when I started. I think for the first, I want to say 7 to 10 months, and I know it's very quick, but there are other ways. I've seen a lot of sponsors that joined other sponsors and took down one piece of the syndication, so they didn't have to run the whole business. And then you get a piece of the promote, and you can reinvest it and use some of it to hire, and then you can grow, and then maybe take a bigger piece in the next deal until you already have enough people that can help you take down a deal from start to finish.
Right. And it's, I mean, that's actually another really good point, in the sense that for sure this is a team sport, right? There,
Yeah.
it's, and again, like myself, an example, I really was like, I can do this. I don't I don't need other people. I'm like, I'll have a mentor. She'll tell me what to do. I'll do everything. It'll be fine. It's like, but because that's how I've done most everything else in my life. It's like when you grow up in that, sort of necessity mode, you're like,
Yeah.
okay, well, I'll just keep doing everything. And at some point you just can't, and you certainly can't do this. And so the partnering with other people and being a small part of other people's deals in the beginning to get going is something that I think, a lot of people, myself included, have to come to grips with. So I mean, that's a really great point, just that it is for sure a team sport. And the faster you can build your team and have, sort of the right people in place, the better you're going to do and the faster you're going to grow and be
Yeah,
successful.
absolutely.
Yeah. Do you want to talk a little bit about your fund? I think that
Yeah.
I think, people listening may or may not be familiar with syndication, but I think that the fund model versus like individual asset syndication it seems a lot of people are going, sort of in the direction of funds. And I think it would be kind of a cool thing to talk about and maybe explain why you as a syndicator might go that direction, but also then why as an investor they might want to invest in a fund versus an individual deal.
Yeah, I think that investors, generally speaking, I mean, obviously you either like to invest in a specific deal or in a fund. Some are actually investing in both. And I have investors that put money in both. We have a new deal now that we're raising money for. And so we have investors that put, 100K here and 100K in the fund. Um, the specific deal, the advantage is that as an investor, you know exactly where you are, what you're investing in. You can vet the deal, you know what the market is. On the flip side, if you write $100,000 check, then if the deal doesn't work well and something happens, then 100K, that's at risk because you invest the entire amount in one deal. In a fund, you don't know what exactly what deals are going to be included in the fund. Um, so that's kind of the disadvantage. But on the other hand, the 100K you're going to put in, they're going to be divided over 5, 6, 7, 10 assets. So in terms of the risk, you have a lower risk because you basically, it's the power of the diversification that you don't get with a specific deal. I actually thought that most investors would prefer the individual deal structure.
Yeah.
And we started Rev Funds in about a month ago. We launched it. I was surprised, actually. I didn't expect that many investors to like the fund structure. And people were happy about it. They like the idea of diversification because the fund basically says we're going to purchase mainly Class B value-add assets, potentially Class A as well, and it's going to be across 5 different states. And you're going to get diversification not only of different 5 to 10 assets, but it's going to be diversified in different states. So if something happens and the economy shifts, then not all markets are going to react and be impacted in the same way. So your money is more protected because you're investing in a fund that is basically very diversified. So that was the idea behind the fund. The surprising advantage that many investors don't think about is that right now everyone knows that it's a very, very competitive market, extremely competitive. And one of the ways of actually getting the good deals is to say, I already have the money. It's in the fund. It's ready to go. We're ready to go. And so the seller looking at 2 offers, even if one offer is slightly higher, but that buyer needs to go out and raise the money, and just a chance they're not going to be able to. You have another deal that the money is there, so the surety of closing is very, very high. They'll get that deal, that they'll award the deal to that buyer, even if it's not the highest price for the most part, because you have a higher surety of closing. And so investors in funds, in our fund, in Rev Fund, they have access to the best deals in the market because we can compete even better than we could until now.
Yeah. Yeah. And that makes a lot of sense. I mean, I think as the actual syndicator, I feel like that's a very clear advantage, right? You've essentially, got the money in the bank. Here we go. We're good. And so, yeah, I mean, I guess the diversification on the investor side of things, the LP makes sense as well. I'm curious, are you able to, so suppose you have an individual deal can you use the fund? Basically, can you fund an individual deal from two sources, from fund and then individual investors? Like if you have a subset of investors that want to invest in individual deals, and then you have your fund, can you combine those onto a single deal?
Yeah, that's what we're
You
doing
do.
right now, actually.
Okay.
So we allow investors to choose if they wanted to invest in the new deal through the fund, through Rev Fund, or through directly through the investment, the deal itself. So basically, the fund and the other deal specific LLC, they're two LLCs, they're both
Yeah.
investors. So in that sense, there's not much difference. Not all deals are going to offer it this way. Some deals are just going to be purchased directly by the fund, and some deals we're going to offer it both to the fund. We're going to purchase it in a fund and also allocate some of the equity to investors, because some of my investors still like to come in and invest specifically in a specific deal.
Yeah, yeah, that makes sense. Do you find that, in my head, I would think that the people that would want to invest in the funds are going to be like the large institutional investors, like family offices, people, the really high net worth individuals, and then people that might want to do, I don't know why I think this, I just, that people are maybe not putting in as much money, want to be in individual assets. Or do you feel like it's pretty divided?
It's pretty diverse actually. Family offices like funds. It really depends on a family office. Some of them like to vet every deal, so they're never
Yeah.
going to invest in a fund, and some of them like funds. And then actually high net worth individuals, they like both. They like the fund. I think it's easier if they know and vetted, and if they've heard, about the sponsor. It's not the first time that they hear about the sponsor. So a sponsor, which I would say the better track record that you have, the stronger track record, the more likely it is for investors to come in into the fund. Because there's some history there. There's some projections that you can compare to actual performance that you can show. And so investors, when they see that, they say, okay, the deals that are going to be purchased by the fund, they're more likely to succeed because we see that history. But family offices and individuals, they're both they're pretty much, I think it's kind of it's a combination between the specific deal and the fund. You can
Okay.
find investors, on both sides, from either as family offices and in high net worth individuals. Institutional, it's a little bit of a different story. I think most of them don't like funds. I think they like to sit parallel to the fund. It really depends on the investor, though.
Yeah, and like you mentioned, probably a lot of those institutional investors have essentially their own team of people that are deciding what deals they want to invest in and not. So if they're just putting into a fund, then those people don't have a job. They don't need to. If they're just going to put it in your fund, then they don't need to have these people that are evaluating all of that. And then I think that the fund structure is actually very interesting. When so I guess going forward, do you think that that'll be, I don't know, the way it's going to be? Do you think that that's how it's going to go? Do you think more and more people will go to the fund structure? Because I would imagine it's very hard. It would be very hard for a new syndicator to just start a fund and have people, if they have little to no track record, just be like, yeah, sure, we'll give you our money. I'm sure you'll do the right thing with it. Whereas an experienced investor like yourself, you can trust that. You can say, I know, she's been doing this. We know that she knows what she's doing. She makes good investments. She's conservative. Like everything's already in there to sort of have that level of trust.
I think it's going to be, yeah, like you said, a bit more challenging. Nothing is impossible. You can do whatever you set your mind to, but I think it will be a little bit more challenging. It's also more expensive to start it as a sponsor. The upfront costs are much higher. And the main thing is that if you're just starting, it's going to take you time to get to the first deal. In that time frame, even if investors are wiring the money early, you need to pay them something, or you can choose not to, but then they're less likely to wire the money because, I've met actually some experienced sponsors that started funds, and the money was sitting there, and then the market shifted, and they couldn't find any deals that were um, basically matching the target returns or criteria. So, for instance, one of the sponsors that I was speaking with maybe 3 years ago, he had a fund, a multifamily fund, and they were still looking for 18 to 20% IRR. That was very hard to find even 3 years ago,
Yeah.
and very high cash on cash. And once the market shifted and cap rates compressed, then they couldn't find those deals. All the IRRs were, lower, 15, 17%. And so the money was sitting there, and there was a lot of pressure on that sponsor because he couldn't find deals to match the investment criteria that he set, because the PPM that investors sign, that's the binding contract. And so that was, one thing that adds more complexity. So if you don't know where the market is and you don't account for any uh, future changes, then the money can sit there, and you're going to be very pressured to find a deal because your investors will want to start getting distributions at some point. And investors, they have to come first. The investors is the first thing I think about when I start working, and the last thing, um, even before I go to bed, because these are the people that trusted me, the people who still trust me. They trust me with their savings, with their wealth. There's no bigger responsibility than this. And if you as a sponsor, if you're not worried about investors, then I don't know, maybe you're the some unique person, but I worry all the time. It's something that is on my mind all the time. Even when we do great, I'm worried that I don't, what's going to happen maybe next month, what's going to happen when interest rates are going to increase, what's going to happen with inflation. There's a lot of things that can happen. Am I set up today? Do I have enough to deal with it? Do I have enough reserves? All those questions. And so my point was that there's, investors, they have to come first. And if you're starting a fund and you don't have the track record, it's a little bit hard to do that, because I do think that the best way is to start by partnering with someone who already, who's been doing larger deals, and take a small part of, find some value. Doesn't have to be equity, it could be something else that you can assist with, and grow this way. But that would be just my opinion. Of course, there's no one way of doing it. There's so many ways you can do it. I'm going to be the last person to say, you cannot do something, because I just don't believe in the combination of can and not.
Yeah.
I just don't.
Yeah. I mean, I guess I would say that maybe it's not you can't, but you shouldn't not care about the investors. I think saying that the sponsors that don't care about the investors are unique is a really nice word for what for what that is. I mean, you're absolutely right. Like, that has to come first. That's essentially the whole point. The whole point of syndicating everything is really should be for the investors. Otherwise, you're going to get caught. You're going to get caught doing something sort of irresponsible at the very least. So I think no, I think unique was a very nice word for it. but yeah, no, it's great. Ellie, I don't want to, I know you're busy, so I do want to kind of get to some of the questions that I like to ask at the end. So the name of the podcast is Know Your Why Podcast. So would you tell us kind of what is your why? And I know, I believe whys change, through our lives as our situations and things like that change. So your why when you're a young kid starting to work to help your family versus your why when you're a successful real estate syndicator is probably different. But there's probably, like we said, that stuff doesn't go away. So what would you say is your why at this point?
Take care of my immediate family. I'll leave it at that. Always has been, and I think always will be.
Yeah. I mean, it's certainly a very powerful why. That's taking care of the people that you love is about all you don't need much more than that to be driven. tell me something that maybe people don't know about you, a hobby, something that's just not common knowledge out there.
I like to drive, and I was hoping to take my car to the track this weekend, but I think it's going to be raining. So I like to take driving lessons, and I need to wear, you know, well, anyways, I love driving. That's one of the things I think that most people don't know about me. When I need to decompress and think or just enjoy some me time, I get in my car, I drive around, and with some music, it really calms me down. It focuses me. It's one of
Yeah.
the things that I love the most, with just driving.
Oh, that's awesome. And that on the track, that's got to be exciting. I've never done that before, but I
Yes.
imagine it's very fun. We'll put things in the show notes, but how do you want people to reach out to you?
You can Google my name, Ellie Perlman. You can go to my website, ellieperlman.com, and on the website, if you're an investor, you can leave your information there, or if you want to reach out, all the contact information is there. So I think that would probably be the best way to do it.
Sure.
Just through
Okay.
my
Yeah,
website.
through the website. Awesome. Okay, one final question. What advice would you like to leave for people that maybe come from similar background, have a similar story, to help them achieve all that you have achieved?
Never let go. Never let go, and never listen to someone who says you cannot. Um, I think many people are giving you advice not necessarily because they still want the best for you, but they're speaking out of their own perspective. Always listen to advice from someone who is successful in the area that you want to be successful at. So, um, if you are looking for an advice from someone about your relationship with your partner, I wouldn't necessarily listen to someone who has been um, dating on and off. And that's obviously I would go to someone with a steady history with a relationship with their significant other. And the same goes with business or with anything actually, in life. Always listen to those who were successful in that area that you're seeking the advice on. And that has been, that has been something that that was one of my rules. And I'm glad that it was, and that it still is actually.
Yeah. Yeah. Find someone that's doing what you want to do and follow their blueprint. I mean, it's not, you don't have to reinvent the wheel. You don't have to, do something crazy to get there. You can use what they've, sort of shown as a good path, and then, as make your tweaks along the way. I think that's great. This was great. Thank you so much. I really do appreciate your time and having you come on the podcast. I'm sure everyone will get a lot of value from listening to this. So thank you very much, Ellie.
Absolutely, Jason. Thank you for having me.
Yeah, no, thank you.